Welcome in Harsh Roongta, a personal finance expert now, and let's take in some mutual fund queries at this point of time. The first query that we have is from Denesh Nair, and his query is: I am 51 years old and I have been investing to accumulate about 50 lakh rupees. By 2030, I have SIP in the following mutual funds. Please analyze my portfolio. The portfolio is Quantum Long-Term Equity, a SIP of 2000, Kotak Multi-Cap Fund Growth Direct Option 2000, HDFC Top 100 Growth Option 2000 rupees, and HDFC Hybrid Equity Fund Direct Growth 1500.
What I would like to tell him as well as other viewers, that I think more than these four schemes, I think what is important is for him to understand the the impact of what he is doing. This 50 lakh figure that he has put, that will be equivalent to about 14 lakhs in today's terms. In 12 years time, he has said that he wants 50 lakhs. And that would roughly, for the next 23 years after that, give him a pension in today's money of about 5,500 rupees. Is that sufficient, not sufficient? It is for him to judge. As far as the funds themselves are, I think the good thing is he started some time ago and he's doing it in a systematic way. I think the funds are all good. What he could perhaps do is to increase the amount from 7,500 to 12,000. Then assuming an 11% return, he should more or less reach the goal that he has, as well as I think he can cut down the schemes. He has four schemes. I would keep maybe two schemes out of this. The long-term equity fund, which is needed by him, and the Kotak Standard Multi-Cap Fund is what those are the two.
Do we have Harsh still with us on Skype? Oh, he is with us. The reason we've got Harsh on the show today, and we don't usually do a personal finance corner on Markets at Noon, is because it's the last trading session of 2018. You can say this is the New Year's gift from the team at Markets at Noon for all of our viewers, and Harsh will be the one answering all of your queries. Keep them coming in via email. You can even tweet us or put them on Facebook. So Harsh, I'm going to move on to the next viewer queries coming in from Manoj, who has SIPs, and the ones he has are going to be coming up on the screens. No point reading them all out. Manoj says, I've stopped SIPs but kept the following funds, and that list is now coming up for you on your screen as well, on where it is that he's putting in. Wants to know if the new portfolio is indeed a good one, should he stick with it, or requires more rejigging. Harsh, we've shared this list with you, the old portfolio, the new portfolio. What do you make of it?
See, I think the issue with questions like this, I would like to put it to Manoj or anybody else, is we have no clue for what purpose Manoj is making these investments. How long in the future will he need the money, after how many years, etc. So it does not matter which schemes he is putting his money in, for what purpose and for how long, and what is his risk profile. I think these are the three more important questions than specific schemes. I would like to tell Manoj and other investors that obsessing about which scheme comes fourth in your order of priority. Please first decide for what purpose you are making the investment, when will you need the money, what is the risk profile. Take professional help from properly authorized investment advisors if need be, but do not put the cart before the horse. You are asking about schemes without even talking about for what purpose you are making the investment and for what period.
Right, let's go across to the third query that we have. It comes in from Shankar. He says that I'm an NRI and have started a SIP from July 2018. I have been investing every month in the following mutual funds. A sum of 1 lakh rupees to create wealth in 5 years. I have a moderate risk appetite. The portfolio that he has is about 7 funds. They'll come on your screen. It's right from Axis Focus 25 to Invesco India Growth Opportunity, HDFC Mid Cap, Kotak Standard Multi Cap, Motilal Oswal Multi Cap 35, and Principal Hybrid Equity.
Again, I think at least he's given us a profile and he's given us a reason. Although I can't understand why the wealth generation goal should be restricted to a 5-year horizon. It probably is longer. Assuming it is longer, I think we can stick to the almost pure equity. He has only one hybrid fund out there, which is the principal hybrid equity. But other than that, I think everything else is a pure equity fund. I think there are tad too many funds. They are all well rated, both by the various sites that rank these funds. Our own internal rating on most of these funds is high. But I think he has far too many funds for one goal and for the amount of investment that he is making. I would say restrict it to about 3 schemes out of this, and assuming that the goal horizon is longer, I would take a large and mid cap fund that he has. So among the large and mid cap fund, he could look at that Invesco India Growth Opportunities Fund. That could be one choice, and then he could do one multi cap or 2 multi caps. I think the multi-cap that he could look at would typically could be the Kotak Standard multi-cap fund. I would restrict it to those 2 funds rather than spread it over 7 funds.
Okay, I do hope that helps Shankar out. And if you still have any follow-up queries, Shankar, you can always email us. Time for the last email query that we've got. This is coming from Nain Rai, almost my namesake. The star in the name is missing, but jokes aside, here's a question coming in from Nain Rai, the viewer. Which are the top mutual funds or SIPs for a first-time investor? I want to set aside 20,000 rupees every month. Harsh, first-time investor, what would your advice be?
Again, I mean, sorry to sound like a broken record, but I think you invest with a purpose. So I think first, please decide what your purpose is. When do you need the money? What kind of scheme you would invest in would then be determined based on that factor plus your ability to take the risk. But so as to not say duck an answer to this, for a first-time investor who's not very clear for how long he would want to invest, I think the idea is for him to get used to investing in a disciplined manner, irrespective of whether the market goes up and down. And I'm assuming, therefore, that he would choose equity, that he has a long enough horizon for him to choose equity. And in order for it not to not to have to take a very active this thing, he could look at a passive investment. He could look at a Nifty Next kind of an index fund or a BSE 100 index fund. Some kind of an index fund he could look at. But the idea is to get used to investing 20,000 rupees month after month, irrespective of what is actually happening to the market. I think at this stage that is what he should do. If he needs a tax break, then he should look at a tax equity fund. I mean, he could look at the Aditya Birla tax relief fund or the ICICI Pru tax relief fund as well.
Which one? ICICI Pru. Okay, so with that, it's a wrap on this Personal Finance Corner, a special one that we had on this edition of Markets at Noon. Call it the New Year's gift from the entire team that puts together Markets at Noon every weekday.